Hello and welcome to Tuesday Night Live with the House Heroes. How's everyone doing out there? Welcome all House Hero and Wham Fam. Hit the notification button, guys. If you like what we're talking about, we're very, very interactive here. So if you have a comment, leave it. We'll definitely get back in and we'll interact with you. So tonight, what we're talking about. Well, first of all, it's Cinco de Mayo, right?
Woohoo!
Hey,
Did you
guys.
bring some maracas for me, Troy?
Yeah,
what
it's
do we
like
got going on here.
I mean, the bars are packed, right?
My wife went to get tacos for us today. And she got in line. She's like, it's around the block. She's like, forget that. So then
that was Taco Bell. What about Del Taco?
Right? Then she goes, Del Taco. No, so she goes to Rubio's. I'm like, what happened to like the street tacos from the local vendor? And so she rolls to Rubio's, but she orders on the way. She got there. She waited after she had ordered online somewhere else an hour waiting for that food. So yeah,
it's crazy. Insane. I mean, it's like, you know, what do we do now? We actually wait in fast food lines or in restaurant lines now.
Ridiculous.
That's crazy. You know, this is a really popular holiday, and now we're all kind of stuck in a taco line, right? You know, and hopefully we all bought our tequila, months ago, right? Now it's sitting on the shelf for me, and I haven't touched alcohol since this all began. So kind of different.
I don't buy that.
That's
why you're so hard to deal with now.
Okay.
Get this guy some alcohol.
So tonight's topic, let's go right to tonight's topic. Tonight's topic is how the real estate process has changed since the COVID-19 pandemic. So we're going to go over that tonight, guys. How all the different real estate, mortgage, what's all changed in the processes. We're going to hit that tonight. But first, we want to talk about in the news. And first of all, in the news, Ryan, what have we seen?
Well, my favorite friend, Jimmy Buffett.
Jimmy? Is it Jimmy or not Jimmy?
We're going to talk about Jimmy Buffett today.
No. Warren Buffett.
Oh, man. Jimmy Buffett's so much more fun to talk about. All right. So, Mr. Buffett over here, what did he say, Troy?
So what he's come out with just this week, he had his stockholder meeting. It's called Woodstock, actually. That's what he calls it.
Well, it's the Berkshire Hathaway shareholder meeting. So
right.
the analysts, they dubbed it Woodstock for capitalists. I don't think he refers to it as that. But maybe, I don't know.
Well, it's kind of interesting what he had said. And as we're all figuring out what the stock market's going to do, he said we're still a better country now than at any point in our history. That is a statement from the number one stockholder in the world, number one person everyone looks up to. He goes on and says, and we've been through the worst before. Buffett said in a message, never bet against America. Dude, I mean, give this guy a hand. He is all bought in, even though he sold all his airplane or airline stocks, right?
And even said, he's like, you know what? He's just like, I'm not going to get anything out of this business. Nothing to dig on the CEOs or well-run companies, but it's just not a good business model right now. So it's wild, absolutely
right.
Wild.
So, but that was very encouraging hearing that from Warren Buffett. So, what else do we have there, Ryan?
All right, we got a bunch of lines going straight across the page. What does this mean to me, Troy?
Medium home prices. So again, we keep hearing all the little negative news across United States, about home sales and this and that. We wanted to kind of go over Southern California really fast here on medium home prices. So go ahead and give the definition of median home prices, Ryan.
So median home price, that is where half of the sales are above that price and half of the sales are below that price. So it's not an average. You don't take all the numbers up, add them together, and divide by how many sales they were. That'd be an average price. This is median. And what this tells you is, where that kind of midline is of where sales are happening. And what we've expected actually for the median to really decrease, because a lot of the higher purchase price homes are going to be the ones most affected by this pandemic, mainly because jumbo loans and lending is tight or non-existent in that space. And people that are looking to buy in that space, they normally, are business owners and things like that, and they can wait it out and just wait until the dust settles and know that their businesses are going to be okay. So we really expect these numbers and these headlines to say, hey, median prices are crashing. And right now we're just not seeing it.
No. And in fact, these are all four counties. This is LA, Orange, Riverside, and San Bernardino counties, and actually on a few of them they've bumped up, and it's been kind of crazy. But these are the last 4 weeks of median home price. So we're going basically through April, almost all through April, actually the very end of March, going all through April, and we're seeing that prices are steady. So that's very, very encouraging. Rolling into the summer months, and now I know that I've talked to a couple of my title reps, and they're starting to say, yeah, now we're seeing more homes hit the market, which is another encouraging factor. As we're going to see here in a slide coming up, that it absolutely is a seller's market right now.
Yep. And before we get to that side, let's jump into this one. So, people keep saying, hey, when's it going to crash? When's a good buying opportunity? And I tell them, this is not 2008. This is not, everybody was buying homes with funny money, doing negative amortization loans. People actually have equity in their homes, and they put real money down on their home. This slide's amazing right here. 53.8% of all homes in America have at least 50% equity. So, most of those people, when you have 50% equity, you can't even go rent a home for what your mortgage is. It's less. So why are you going to make a move? You're not going to. If you do have to sell, you're going to be able to cash out and have a big nest egg to go do whatever you're going to do. So when you have this much equity, people don't panic sell. They don't need to. They just sit tight and ride it out. This other number here, 37% of all homes are owned free and clear. That is a huge number. And again, that's why so many people can just sit and ride it out. I've talked to some of my clients that are boomers. They're, selling an asset here or there, and, they're hunkered down and just enjoying their time. And they really don't care which way the market goes. Yeah. So, and right there, the average equity of mortgaged homes. So, I know you and I were talking earlier today, Troy, about, 8%, I think was your number.
Yeah, as year over year. So I actually got this particular slide was because of the forbearance. So we keep hearing about, so many homes in the United States have already filed for forbearances. We just wanted to go over that. That doesn't necessarily mean that they cannot pay their mortgage. And it also doesn't necessarily mean that they don't have equity also. So instead of they're panicking and they're going to REO, they're pushing off their payment. That's what a forbearance is for. It's pushing off the payment. It's not to say, hey, I'm sinking right into the ground and I'm going to become a foreclosure. And this slide kind of highlights that.
Yeah, it highlights it. And like you said, so year over year gain was 8%. So if you bought a home a year ago and you got to get out today, we constantly are quoting just a ballpark. It's 6 to 8% total cost for a seller to get out of a home. That's commissions, closing costs, whatever, termite repairs, things like that. So at 8%, if you bought a home a year ago, 100% financing, you can walk away today and just kind of, hey, clean slate. I had a client call today. They want to move up. They thought they bought their house 3 years ago. I found out it was 18 months ago. And again, boom, 10% up. They're going to be able to walk with what they put down on their house, plus all of the mortgage payments they've made up to this date. They'll get back. I mean, where else can you rent for free for 18 months? So they got in, they're getting all that money back, and they're going to roll that into a larger property as their needs and their family is growing. So, those numbers are key. People are able to come out and not be upside down. Because they're not upside down, you're not going to see the short sales and the foreclosures that have to happen because they don't have equity.
Yeah. So the next slide here is showing the inventory. Are we in a buyer's market or a seller's market? And the indicator is how many months properties have been on the market. And, an average of, when I list a property, how long does it take for it to go into escrow on an average of all properties on the MLS? And here's a very, very good graph we put together here. Back in 2008 to 2010, when the market kind of crashed, which people start to, talk about today being the same way. Well, this absolutely tells you it's not.
Completely
right?
Different.
It is absolutely a seller's market. And if you look at today, which today was considered Monday of this week, we're looking at closing on all-time lows right around the 2-month mark. And that's crazy. I mean, it takes 2 months to sell.
Well, and yeah, the numbers we've been reading, we're down here in Orange County, in the local Southern California market, it's closer to 2 to 2.1 months. So it's dropped down to here. It's absolutely wild to see how deep of a seller's market it is. I know I had a client, finally got approved, super excited, want to go out there. We set their criteria, their main, cities they want. Went out there and everything that was good had offers on it and literally was getting accepted the day we were going out. So they said, hey, we want to add a couple more cities. So we made the search a little bit bigger. And, we went out the next, I think it was like 2 days later, went out, looked at all those other properties they were interested in, and they all had offers on them and were gone. And then they're like, hey, let's add in these other cities. So now we've got a bigger search. And those properties, we got one that we were interested in, maybe a backup. Now we're dealing with issues with the seller on one of those that doesn't even know if they want to sell. And in the meantime, now we've spent 5 days looking, and they're like, Ryan, now we've got this bigger search, and we haven't seen another good property come on the market. And that's what we're seeing. There's not enough inventory. So people were thinking, hey, demand's going to drop off. Well, demand might have dropped off a little bit. The problem is the supply dropped off even more. And it just comes down to supply and demand with price.
Right. So before we get into the next segment, which is how real estate processes differ in this environment, let's go over a few shout outs, Ryan.
Yeah, let's do it. And remember, everybody, we're interactive. So please ask us the questions you have. I normally say, hey, you're at the cocktail party, people are talking about real estate, and you hear something and you're kind of curious about it. Hopefully you're not at cocktail parties, maybe at your Zoom cocktail party or something now. But what are you hearing out there that you're curious about, that you're not sure about? Mainstream media, friends, family, whatever. We like to be here and cut it to you straight, what we're seeing and the truth about what's going on. So a couple shout outs. What's up, Aaron Christian? Good to see you on here. Tell Roy I say hi. What's up, Roxy, Andy? Roxy saying hola, hola. And yes, market is insanely red hot. I'm still working. And then Sarah Montgomery, what's up? Tell Marcus I say hi. I think it's his birthday. If it wasn't, I don't know.
See you tomorrow, Ryan.
Happy birthday. So
I got Dang Win. How you doing, buddy? And then I have a question, Frankie Alvarez. If the closing date was passed and new paperwork needs to be signed, should I be paying more closing costs? Your closing costs, so that's a good question because that's a mortgage question. Your closing costs from day one when you signed the contract and it was accepted shouldn't really adjust, especially on the real estate side. Yep. The only thing that's going to adjust is on the mortgage side. And so any closing costs increase or decreases are definitely due to, what you're paying for that mortgage itself.
Well, and the other thing is what will change the most, it gets lumped in with your closing costs, but it's your prepaids. So depending on what day of the month you're paying, you're closing on, you might have prorated HOA that you're paying back to the seller. So if the seller's already paid the HOA, you need to pay them back for the portion of the time they're not going to use it. Same thing with taxes. Depending on the month you're now rolling into, you're going to have a different tax proration that you're either getting a credit or giving money to the seller. So depending on what day you close, if you're pushing it off, those things will absolutely change. And it could be a benefit as far as a credit, or it could be a deficit as far as you're paying the seller more, or the county or your insurance company or whatever it might be for those costs. So yeah, closing costs are a fee, and then there's also prepaids in those.
But I want to go over one thing that I've told all my clients just recently. We know that the property taxes are paid they're paid in advance. So as a property owner, I pay 6 months in advance. That property tax was due April 10th, which was less than a month ago. Anybody closing now, Frankie, you're paying 5 months in advance. So always understand that because the seller's already paid 6 months in advance on April 10th. So you're paying approximately 5+ months in advance. If you were to close, let's say in the summer, you're paying 2 or 3 months in advance. So as we get closer to that, so take that in consideration that it shouldn't change at all. Your closing costs should be the same the day you sign the contract. Those property taxes are already calculated properly, but right now anyone closing is paying more property tax than they would next month and the month after and the month after that. So another one, this is from, is it Wam Garcia? How long does the loan process usually take? I had paperwork submitted to underwriting since April 23rd and haven't heard anything. So if the loan process, if you're getting pre-approved, then it could take longer because you're just trying to get through underwriting, right? And underwriting always puts the purchases or what actually is active in their pipeline first. If you're in escrow and it was a 23rd, you should already start hitting milestones such as, turn in all your income and asset documents, have the appraisal ordered. Those should be milestones that your loan, your lender, your loan officer should be in touch with you and communicating with you and your agent as well as the listing agent. So they're all informed. And as we go through that process, as well as everyone else knows what's happening with that loan.
Yep.
So Javier Martinez, as things begin to open up, stores, etc., do you think the rates will go up? Right now, Ryan, what do you? I don't think rates are going up.
I don't think they're going to go up. I think if anything, they're going to float down. The
economy stimulus
completely. They had such a huge amount of refinances coming through their pipeline because there was already low rates as this was hitting, and a lot of them actually started bumping up their rate, even though the 10-year Treasury was down and a lot of these other bonds were down. They pumped it up because they actually didn't even want the business. They couldn't handle the business. I think all of that kind of works through the pipeline. I think banks are going to start going down, and those mortgage backed securities, the interest rate on them is going to decrease. But it's tough. It depends what type. There's if you're in a jumbo space, I think those rates are going to be higher than they were before. But if you're in something that the federal government is buying a lot of, I think those will keep trickling down, as well as FHA. So. Yeah,
and then Frankie says I'm doing a refi. So if your closing costs go up and down, you got to make sure that they locked in that rate at the time they told you, because then the closing costs would be the same. If they didn't lock in the rate and they promised you a rate, you might have to pay extra for that.
Yeah.
So there's a lot of floating things that are going on here. I don't see it.
To explain those fees to you.
Yeah.
What changed? Ask them how much is going into prepaids, because the other thing is, in a refinance, if you have an escrow account or an impound account, and your mortgage company is paying your insurance and your taxes, you might be getting a refund from them, especially if you're moving to a different lender. But you're going to get a refund on that money they're holding, but then you're going to have new prepaids that are going into the new account. So you just need to ask and figure out how that's being handled. So you might actually see those costs go up, and they're built into the loan. Normally they're just refinancing the loan, but you might get a big check back. So check and just ask them to break down all those fees for you.
So JP has, hey Troy, I know you briefly talked about a fixer home. Would it be less headache if I had a trusted contractor? Well, that's called a 203K rehab loan. I know we talked about that, JP. It is absolutely better if you had a trusted contractor that can handle it. But I always say, they're on your time and on your dime, right? So the second that it closes, remember, you're making that mortgage payment and they're working on your house. And so if they're organized and they're ready and they jump on it day one, that's fantastic. But right now, contractors are very, very busy. I mean, I know a lot of places that actually closed down that ended up calling the different contractors, because they wanted to go ahead and do all those little fixers that they hadn't gotten to. Now they took this downtime with COVID-19 and they've hired it. In fact, in our complex, I saw 3 different contractors show up. One in a dentist office, and other different offices, and they're doing all the little work.
Still pretty hot right now.
Construction's on fire still.
And it's taking them more time because getting their supplies is harder. Like, their whole inventory line of the stuff they're dealing with is harder as well. This is my take on the 203K. There's a lot more paperwork involved because you've got to get a contractor to give you these bids. You've got to have that, inspector or appraiser or whatever it is, look at that stuff, walk the property. Yeah. There's certain draws. So a lot of times the contractors don't want to take that business because they only get paid on certain milestones. And then, they're depending on the amount is the number of milestones. So I know Ming can break that down to you a little more. It's maybe 3 draws over the entire project, things like that. So it depends how big that project is. And then you just need to have that conversation with your contractor and make sure that they've got the money to be able to float that for you until they get paid. So 203Ks can be fairly difficult. And then, if you go back to the chart we had earlier, it's a seller's market. The property you're looking at is probably going to have multiple offers. And the issue is, if there's something else that's a simpler loan to take that isn't going to take as long because there's not as many steps and hoops to go through to get it, they're most likely going to move forward with that loan. So that's the issue. There's not a lot of 203Ks done in the area. I know we used to do a lot up in Washington when we were doing a lot of business up there and foreclosures and stuff, and people were more used to it. Here, the average agent and listing agent they just don't care to accept those offers. That's the problem. That's a real problem with it.
Right. So, and Frankie says, thank you. My rate is locked in. I'm going from a 4.875 down to a 3. Hey, man, congratulations. You almost shaved off 2 points off of your rate, man. That's fantastic.
I'm jealous.
Yeah.
And then Amber Williams jumped in. What's up, Amber? Good seeing you here. I was just talking to a new client today, Melvin. They're like, hey, I love that video with Amber and Min and Troy. And so good seeing you on here.
So, hey, I wanted to, let's go right into our topic tonight, how real estate processes are different during the COVID-19 pandemic. So this is a real big topic that people have hit us up. Like, I've sold my home, or I've talked to people, and the process now is I'm scared. I don't know what to expect. So the number one thing that's changed, Ryan, you want to hit the is access, right? How do I get and show the home itself? As a real estate agent, Ryan, what's the difference that you see now in access?
There's a lot more virtual tours. Unfortunately, it just takes a lot longer to set up showings. Typical, a client likes 5 homes on the list. Every one of those properties now is a completely different set of guidelines I've got to go through to show it. If it's vacant, they might be pretty easy. Send over this PED, this property entry advisory and disclosure, or whatever it is. And that form seems to change every week. Mm-hmm. So we're constantly updating it and getting it re-signed. People have different, expectations of how it should be filled out, whether or not you have to put each property's address in that front and do another one for each property, or if you can just do a blanket of all properties visited. So you've got a lot of paperwork. So, any given property that we'll look at, most likely it's going to ask for this PED, even if it's vacant. And then a lot of them are going to say, hey, we want to make sure that you've seen the virtual tour first. So I've got to text the agent and say, yes, we've seen the virtual tour. And then after that, we can go see it. And when we get there, obviously we'll be wearing a mask. And then depending on, the situation, they might ask us to wear gloves. And booties, either or, both.
All the clients.
And all the clients, they might limit who's in there, 2 people at a time, no kids. And this PED contract says basically, we can't assume if we get it, COVID, and if we do get it, we have to notify them of that
immediately.
Fact. So
let me back up to the PED contract. So the PED contract is from the California Association of Realtors, and what they did was they came up with a contract that's for entry into houses, and they wanted the responsibilities, or the accessibility, I should say, first of all, and the blame or non-blame of both sides, and that's kind of how you look at it, and so that's why. It's not required to go into a home, but the majority of agents now are requiring that's been signed. Ryan did mention that it's been evolving, and last week there was 2 different versions of it. The first versions were, just the actual buyer going into it, and then the next version was a buyer and their agent. Now the current version that just came out, literally 4 days ago, I don't call it 100 hours ago, right? Is now you have the buyer. And whoever else is with them, buyer or buyers, you have your agent, and now they have to have the seller sign it to fully execute it. And can you imagine, as a seller, everybody who walks through your home, you're just signing just a contract just to even get into your house. So this is what the PED contract is, and it's kind of changed things. It's actually slowed down people that are going in, and in fact, I think in a certain degree, it's blocked some access to people going into homes as well. I know that when I'm with the client and they're like, hey, Troy, you know what? We set up 3 or 4 showings. Sometimes those showings get cut down, and then they're like on the fly, they're saying, hey, let's go look at this one. This one just popped up. I didn't give it to you yesterday. Well, then I got to look at that, and I've got to have, an assistant pull that. If there's a PED that's required, I have to have an assistant call back in my office, have them sign it, send it over DocuSign immediately, and then shoot it back to them, and then my assistant's got to then send it over to the seller. And so there's a lot more going on. That's a
great point.
Really
we used to
down
call,
access.
We used to go like, oh yeah, and then the client called an audible. We'll set up 4 showings, let's say, and then you're there and you're kind of like, all right. We saw this other one online just right now, or on the way over, or yesterday. We didn't like it yet. We forgot to mention it to it. And so all of a sudden they call an audible, and you want to go see another property. Before, we just call the agent, try and get in fast. If it was vacant, we just go show it. Now we got to stop, bust out the laptops, get the assistants involved,
Yeah.
and try and go through all these steps on the fly. Where before we could just stuff in showings, now it's much harder to get in those, last minute showings and stuff like that. I know one of the ones that Roxy was working on today, they're requiring that the agent sends over the buyer's verification of employment before they'll let them see the house. That one fell out of escrow, so I'm pretty sure I know why it fell out of escrow.
Yeah.
I think the previous buyer lost their job. Also, to get access, a lot of these, they're asking for the pre-approval up front. Obviously you should always have that pre-approval and ready, but they're asking for the pre-approval proof of funds. Now some of them are verification of employment, the virtual tour, the PED, and then they're verifying you're wearing these masks and gloves. So there's definitely a lot more to each.
Yeah. So I'm going to answer Albert's question here, and I'm going to kind of wrap it up with this. It says Albert says we had to do all those and show proof of funds before we were able to go through the home. Albert, exactly. So what I do is when an agent requires that I have a pre-approval letter and or verification of funds or they got to know if employment, they're employed, I actually talk to the lender and tell the lender, who's collected all their documentation and knows that they're currently working, put that on the approval letter. So I'm only sending one document over. I don't want you, Albert, or anybody else out there, to send over your bank statement. It has your bank account on it. I mean, most people just, you're sending it over blindly. No, have your lender put that information in. If it's needed for that particular showing, put it in there. So,
yeah. And then this other thing, this is kind of under the offers section of what's changed, but this also goes back to access as well. To get into a lot of these properties now, they want you to write an offer on the property without seeing it, and then just put in there that your offer is subject to interior inspection. So they'll basically go through all your pre-approval, go through, what you're going to be asking for, maybe closing cost credits, price, whatever, sort through it and be like, okay, this is in the ballpark of what we would work with, or, even counter you and get to terms. Once they're like, all right, we would be willing to take this offer, then they will make arrangements for you to see the inside of the house, either with the owner or the tenants. And we used to see this very commonly in investment properties, duplexes, triplexes, fourplexes, where they were all tenant occupied. Now it's making its way into the mainstream general resale market for single family homes as well.
Yes.
And they just want to see you jump through all those hoops again to know this person's serious before I'm going to put myself in, danger.
Right. And this is probably these unfortunately homes sit on the market. I mean, if it isn't because of, a scared seller, it's because there's tenants in there and they're scared tenants and they don't want people walking through and them having the possibility of catching the coronavirus. So these subject to homes don't really make sense at this moment because nobody wants to actually write an offer, negotiate price, and they haven't seen the interior of the property, and then go through all the hoops, and then, oh yeah, that house is all beat up. That's why I've been very adamant when I see if my client really wants to see this, I'm adamant to the selling agent, you got to show me a ton of pictures. In fact, do a virtual tour.
Yep.
Just don't go subject to. And a lot of them have an outside picture. I even had, one of the ones I wanted to do, MLS Nightmares. It said on there, subject to. It was a property. It said subject to interior inspections. Do not drive by the home. Do not knock on the door. Tenant is hostile and will attack you. And I'm like, that's actually in the MLS. So wait, hold on. You're trying to sell a house that the tenant is hostile and will attack you? That's what kind of subject to offers.
Well, and that's a great point. If you're going to do subject to, at least have that 3D Matterport, some sort of virtual tour, great photos on before you're going to make us, do all the subject to. I know one of the ones that we were interested in, a client was interested in, they were subject to, but before we got to that step, we actually did a FaceTime with all of us on it. It was a group FaceTime, and that seller walked us to the entire house. We were able to ask them questions. They pointed things out, great conversation, and it worked out really well. My clients ended up not being interested in it, but it worked out really well to sort through some of those homes.
Yeah. So the second thing here on the offer slide is a CVA addendum. That's a coronavirus addendum. It's an addendum that allows that, and it should be written with every single offer. Anyone out there that is looking for homes, this is a must if you're actually with your agent and making sure that this is included. This addendum allows, if you ever had a problem, whether you were affected by the coronavirus personally or affected by the coronavirus through your job or any other means, that you can protect your money and get your money back. Or if you were, laid off or furloughed or whatever, that means that you also can, if you were getting your job back, it allows you to have an additional 30 days in escrow or what's ever negotiated. But it says on the contract, additional 30 days to get back to work so you actually can then purchase your home. And so this is a very important addendum. Make sure everybody out there that's looking for homes, that your agent includes this addendum on every single offer. This could be a make or break for you. I don't want to see anyone out there lose their deposit over not having this particular addendum included into their offer package.
Yep. Good point.
So, loans.
Show me the money.
So, Brian, tell me about loans. What are you seeing different in loans now than 90 days from ago?
There are tightened guidelines. It's like a noose around my neck with some of these nowadays. Things are obviously taking longer. They're worried about, debt to income. They're tightening FICO score requirements. It's across the board. And the biggest ones that are taking the hit are the non-qualified mortgages, and that stuff that Fannie and Freddie won't buy. The government-sponsored entities aren't buying, that you don't have federal, stimulus and bailout money, basically. I won't call it bailout money, but the feds aren't buying those notes. Those are the ones that have more tightened guidelines. Even with FHA, where it's a federally insured mortgage, a lot of the lenders have what's called overlays. So the government hasn't really changed anything, but now lenders are saying, hey, we're worried about getting stuck with some of these loans on our books longer, so we're going to add another layer of protection for us. So that's where you get these credit score overlays and debt to income ratio overlays.
So. And I want to kind of stick on this disappearing jumbo loans. Mm-hmm. This is completely reflective of the higher end homes just sitting and rotting on the market.
Absolutely.
If you look at days on market, it's fantastic. A lot of homes are sold in 30 days. What's really been sitting for 6 to 8 months, which is absolutely a buyer's market, is your higher homes. If you looked at, I know Ryan likes to say, in LA and Orange County, you're looking at the $1 million to $1.2 million is your death spiral, right? The home just sit for literally 6-8 months, and a buyer comes in and you got an offer. They're just wanting to sell. If I look at the Inland Empire, you're probably pushing the $750,000 to $800,000 range in a lot of areas where those homes are sitting on the market. And again, all those entry and mid levels are just getting pulled off the shelf and sold right away immediately.
Yep.
We're also seeing higher FICOs, and when we're in a refi market, and the refi started coming in heavily beginning in January and February, what happens is these bigger loan companies, what they do is the one way to slow down and to now cherry pick their clients is to raise their overlays that you discussed, Ryan, with higher FICOs. Yep. So I know that we kind of had a chuckle here. I think it was with Wells Fargo who decided, or was it Chase? I can't remember. Was it Chase?
720 above.
Yeah, they said they won't take FICO 720 above. Yet the month before they would take a 640 FICO, right?
Well, and the other thing is, a lot of these are asking for more reserves in the bank.
Yeah,
they're really worried about you making that first mortgage payment, and really the first couple of years of mortgage. A couple more on shoutouts. Amber Williams says these requirements are bonkers. Pictures and virtual tours don't give you the same wow factor.
Right.
Remember that house in Elsinore with the pool? Who knew the backyard would look like Idlewild?
No, and that's not the city Idlewild, right? That was the wild. It was a wild. I cannot believe there was not even concrete from the door to the pool. You literally walked through grass to get into the pool. Like, seriously?
My sister-in-law wanted to see a property once, and the photographer had taken the photos from like just a hair above countertop level in the kitchen, and it looked like it had these nice new quartz counters. Well, we got there, none of the cabinets in the kitchen were bolted to the walls. They were bought from like a Salvation Army, store where it was like for another house. They got them, moved them in, nothing fit, and in the corner there was no countertop. So they had like cabinets with some counters that were also free floating on top, going one way, and then the counter the other way. So the angle they took the photo, you couldn't see that there was missing countertops in the corner, and it looked like you had these nice new cabinets, but they did not fit at all. Everything was mismatched. It was definitely some good photography. That guy should get a Pulitzer for that.
Want to shout out here, Jody Jackson. How you doing, Jody? Congratulations. We got you in escrow. I know in a fantastic little unit there in Sylmar. So congratulations. Now we just got to go through the process. So, all right. So next is the closings. What's changed in closings during the COVID-19, Ryan?
Well, a lot of escrow companies don't want people coming in and signing their loan documents. So you've got a lot more mobile notaries happening. You have some of these curbside now, where you roll up to the escrow curb, they'll come out, sign the papers on your trunk of your hood, trunk or your hood, and just mosey right on along. You obviously, a lot of the counties were shut, so they were only accepting electronic recordings from the title company. So they'd scan them, send them to the county. They were all done electronically, nothing over the counter. And then title companies, so if they couldn't get the recording done, they would actually insure it. And I think there was like some sort of gap insurance they would even place on it to say, hey, look, we're taking this risk until it gets recorded.
Right.
So there's a lot of interesting things going on behind the scenes. And I'd say that really there was a lot more of the, title insurance, jumping through hoops and the recordings right at the beginning because it was there was all of a sudden these new guidelines put in place and they had to work around them. And so there was a lot of stuff happening behind the scenes to really keep closings happening smoothly that people didn't even see, which is fantastic because you didn't hear about it, which means they did a really good job.
Yeah, and I mean, people at the county were furloughed too, so they went down to skeleton crews. So how do you record? Well, you electronically record, and someone there just pushing buttons, and that's actually what happened. And if that person got overwhelmed for the day or called in sick or whatever, that's the gap that the title took as a risk on that they've never done that before. So they actually thought this through at the very beginning of the pandemic back in March, and this is what they're doing. So congratulations. I really like that the title companies went out of their way to continue to see business keep rolling forward.
Yep. All right. So what good is going to come out of this, Troy?
Well, these are the changes. These are the changes that happened that might be permanent or become permanent. They've been talked about, but until they got put in place, then we didn't really know how the effect was going to happen. But now we're seeing it. We're seeing, loan guidelines are tighter. And right now, for the foreseeable future, we're seeing that. Yep. If you talk, as all you Wham fam out there, you talk to men, and now, and I'll jump all the way down to the public education on loans. That's what is happening. He's going out, and people are now becoming more educated at a younger age on what loans are about. What are FICO scores? What are DTIs? What's my debt? If I'm really interested in purchasing a home, then I've got to actually look at this at a much younger age. And we're seeing that as we've gone over. And, a couple months ago, what is the average age now continues to fall. Almost every 6 months, it was falling a year down. So people were 37, down to 36, down to 35, down to 34. So the average age was right there in that 34 range. And that millennial generation wants to have education. Yep. Virtual tours,
so
Ryan.
There's going to be some better virtual tours. People are going to use them a lot more. It's going to be a little bit more of the expectation and the standard. I'm really hoping that electronic notaries roll through. It's just another actually big expense at the closing table to have notaries done. Either mobile notary or ad escrow. It's a pretty big inconvenience. We've got different things from blockchain technology to a lot of the electronic. We're using DocuSign on all this stuff. So I really think electronic notaries are going to start to head in a little bit more. Obviously, forbearance, people know what it is. So people know that that's a tool they have in their tool belt if they get into a tight spot in the future and they can use it. And then this public education.
Well, let's stop here at forbearance, friend. So I think what we've done here is the president has come out and said, okay, you can get forbearance up to 3 months. And then, of course, the governor and then the different, entities, bank entities and lenders came out, and some of them are yes, some are no. But I think going in the future, if you can prove that you are maybe, you've maybe lost your job or you're furloughed, but they see that it doesn't have to do with anything to do with your health or something specifically attached to you, that you are educated and you can go out and find the job in the same industry. I think forbearance is now going to be a special, it's going to be something special that the banks will allow. Instead of going to foreclosure, they'll go to forbearance, and it will be because of, again, a special circumstance. So I think that's going to be something in the future that we're going to see going forward that we have never seen before.
And then drive-by appraisals. Obviously, we're having a lot of drive-by appraisals. Fannie and Freddie were already, and even Ginnie Mae loans, I think, were starting to do waivers on appraisals, where they would just do a desktop appraisal already. So we had quite a few closings this year that were already, and last year even, that had didn't have a typical appraisal. An appraiser go inside the house, map out the whole house, take all the photos inside the house. They're going off the desktop. They're using, a computer valuation model and stuff like that. I think that's just going to expand.
Yeah. And so here it is, how to test drive a neighborhood. So if you're out there and you're looking for homes, these are the 7 different things that we say you could do on your own if you wanted to, on your own, prior to writing an offer or prior to even looking at the home in that area.
And I think there's another good, benefit that comes out of it, since people are couch surfing for properties more. I think they're going to get used to doing this. So one is just checking out neighborhood publications and local social media, whether it's the Corona Buzz, Anaheim Buzz, Orange Crime and Safety. There's a lot of very good social media, neighborhoods out there that you can check on neighborhoods. So also just Google Earth. When I'm looking at, properties with a client, and if I've got the time, I always want to pop up Google Earth with them ahead of time, especially if I'm helping them sort through things. I'll look from the top down view. Does it back to railroad tracks? Does it back to the freeway? Is there anything I see that's going to be kind of an issue with the area? And then I drop down into street view. I'll go up and down the street and just say, hey, these are small streets. I know you didn't like that on the last house. Take a look at, street view really quick.
If there's a lot of apartments right there in front of you.
Look, even on Google Earth, street view, you roll through and there's no parking on the street. Everybody's jam packed. It's probably going to be like that all the time.
It's a renter area, right?
Renter
it's
area,
not an owner area.
High occupancy area. So there's certain things you can absolutely whittle away with just sitting there and looking at, Google Earth and Street View. So, and then browsing websites with neighborhood data. There's quite a few out there. There's different walk scores, things like that. And then investigate schools and educational data. There's greatschools.net, stuff like that. And then checking safety ratings. There's different sites for that as well. And then understanding your daily commute. It's hard to judge that now, to be honest with you, because, your commute's probably going to take a little, it's going to be a little quicker right now. But, going, we've talked about this with lots of clients in the past. Hey, you're making a huge move to a totally different area from where you lived and a long ways from where you work. Why don't you take that drive, an imaginary drive a couple days of the week and make sure you're going to be okay with that. That's a fantastic, idea and something you guys should definitely consider. And then number 1, boom, saving the best for last. Call a real estate agent. So
pick the right real estate agent.
Yeah, pick the right one, and then pick their brain. So have them have their experience and knowledge work for you.
So I'll throw a little shout out before we get off here. Erica Roca says, love the virtual tours, saves a lot of time in searching for the right home. Yes, absolutely. Sometimes they make, I've heard this quite a lot from my clients. Some of those look really, really nice, and you get into them, and they're not as nice as they can look. But it's a good starting point if whether you like a home or not. Sometimes on those virtual tours, it actually gives you distances and lengths, so you can see, like, okay, is that really a narrow hall? Is that a wider hall, right? Or how big is that front room? Or those things are, those things are actually a very big plus.
I really do like the Matterport. It's high quality. You can zoom in and you can see cracks on the ceiling. You can see, torn carpet. Like you're saying, you've got the ability to measure different things. Okay, would my couch fit there? They're the virtual tour, those 3D renderings and walkthroughs now, they've come so far that they're very, very helpful.
Yep. Well, guys, hey, thank you very much. It's Cinco de Mayo.
Yes.
Have a drink of water on us.
And 9:45, I think Min's getting ready to go live. He's going live at 9:45 on Instagram. So if you guys are still down to take on some content, go check out Min. He's going to be on Instagram here right now. And then definitely like and follow us on Instagram as well. We're going to have some great new content tomorrow in our stories and some posts. We're going to do a drive-by in Compton. Got the 8K ready. Well, maybe not. But we're going to do a drive-by in Compton for you. And if you guys have any questions and you're watching this afterwards, please leave us a comment, shoot us a message. We'll get back to you. Thanks so much.
Thank you very much. Have a good night, Tuesday night. Be safe.
Peace. God bless.